Hey everybody, Mike Bruce here, and I want to talk to you real quick about the next couple of videos that I'll be sharing online. I'm going around the community and I'm interviewing certain professionals that I consider to be experts in their field and talking about what's going on in our community. For starters, Dustin Nelson is a CPA in the Denver area and has some great insights on what's going on in the latest tax changes. Now, before I show you this video, I have to disclaim that I am the one doing all of this videography, so by no means is it perfect. But I'm learning. So hopefully in the next couple of series, these videos get a lot better. But I want you to watch this and take note because there are a lot of great information that Dustin is sharing. If you have any questions, please let me know. Enjoy. Hey everybody, Mike Bruce here with Keller Williams. I'm sitting down today with Dustin Nelson with Nelson & Company. He's a phenomenal CPA in the Denver area, and I've been hearing a lot that's been going on in the area about tax reform, the new tax changes. Some people are saying it's going to be very harmful for us. Other people say it's going to be very beneficial. So I just wanted to get a professional's opinion and see what it's going to take. So I asked Dustin to sit down with me today. And Dustin, thank you very much for sitting down with me.
Thank you.
Would you mind kind of explaining to us what this is going to do for it?
Well, I think in general terms, the new tax law is a tax deduction. It is a tax break. So whatever politically charged information that's out there, there's a lot of bad information, there's a lot of good information, and ultimately 75% of people out there should see a decrease in taxes. Your average family, so this would be people married under 75,000 of income single, I think, and married of under 120,000. You should probably see somewhere about 1 to 2%. So not life-changing, but I think the average they're saying is about $1,600 of tax savings. And that's probably mostly people with W-2 wages earning, not owning businesses. Of course, this law is very, very beneficial to the small business, Main Street type people. There's a new 20% deduction for any type of business, whether you're a sole proprietor, a single member LLC, S corporation, or partnership. These pass-through entity deductions, and it does include in real estate. I think primarily in real estate, the things that are new that have changed in this area that you guys should be aware of. The mortgage interest deduction, so this is to build, buy, or improve your home on a first or second loan. You used to be able to deduct up to $1 million of interest, and then any homes purchased after December 15, 2017, it's going to be now $750,000. The other area that people should be aware of is HELOC interest is no longer deductible in 2018, so you're okay when you file your 2017 tax return. But in 2018, that goes away. It has been repealed. So that's on these slides right here. And then the other two things I think that are worth mentioning that relate to real estate are going to be the sale of your primary residence. There was a lot of talk whether they were going to change this term or how that works. And so they actually did not change it. It's the same rule it's always been after much debate. And so that means if you've lived in your home for 2 of the last 5 years, and you sell it and your gains are more or less than 250,000 or 500,000 married, you don't pay any tax on those.
Okay.
So that's a pretty good one. And then also they have revamped the like-kind exchanges, and in real estate there's a lot of like-kind exchanges from real property to real property. So this is business property, not your primary residence. If you have, say, a rental property or investment property and you want to sell that property, you can actually use an intermediary, go through your like-kind exchange, and you would then be able to not have to pay any gains on that, potentially, if you follow all the rules. So that kind of gives you a nice little snippet of some of the tax law changes as well as how it would affect real estate.
Yeah, so it doesn't seem like the sky is falling just yet.
I don't think the sky is falling. You know, what I would say is that if you're a W-2 earner and you don't have a business and you earn $200,000 to $500,000 of gross income before any deduction, that you probably are going to actually, with the law, and I think this slide explains it, right now you're only going to be up to $10,000 of state taxes in 2018, where before you were able to deduct all your state taxes, real estate taxes, and these type of things. And so people that make $200,000 to $500,000 gross income typically have a lot of, nice houses, second homes. They pay a lot of real estate taxes, and of course they pay a lot of state taxes. Well, in the case studies that we've saw under the new code, was $500,000 of gross income in California, which is about double the tax rate in Colorado, and they were going to see an increase of $18,000 in tax under the new code. And you look at it and you think about it, and yeah, that's kind of a big number, but on gross income, it's still less than 2%. So this, again, for that person, while they make a lot of money, it's not life-changing for them. It's not good news, but to me, if you extrapolate that data out to Colorado, with us being about half the tax rate, we've advised our clients that are in that neighborhood of $500,000 that their taxes are going to be increased by $7,000 to $9,000. But then again, if you own a business and you get this 20% deduction on gross income, so I have a business, I'm a sole proprietor, I'm an S corp, whatever you want to call it, and you make $100,000, you automatically get a $20,000 deduction. You're better by the code in all instances, in my opinion. And I think that while there's good things and bad things, and it's exciting, and most people will see some type of tax cut, but I think I've just shown one way that you may owe more tax under the new code.
Awesome. Dustin, I really appreciate you sitting
Yeah.
down with me. Thank you. If anybody has any questions for Dustin, you can reach him at his website at nelsonmycpa.com. If you have any questions for me, feel free to reach out over Facebook. Thank you for watching.
Thanks.
So there you have it. If you have any questions, feel free to reach out to me over Facebook or call me at 720-588-3199 or email me at mikebrucere@gmail.com. Have a great day.